Good morning, everyone. Welcome to Prebell with William O'Neill India. My name is Rajashekhar Kongari, Equity Research Analyst. Before we go ahead into this presentation podcast, I'd like to state the disclaimer here. Whatever stocks we discuss in this podcast are intended only for educational purpose, should not be taken as an investment advice. Let's look into Nifty's daily chart taken from our website. And we'll be talking about the O'Neill perspective as well, how we are looking at the markets at the current moment. As you all know, Nifty has scaled new highs recently. Last week, it has traded above 18,600 levels, which was an all-time high made previously in October 2021. So it took almost more than a year again for the Nifty to scale those new heights. During the last 1 year, lots of things have happened globally as well as in India. So market was also highly volatile. If you see the pattern, there were lots of zigzag movements overall. Currently, the direction is very clear and the market is in very intact. The upward momentum is very intact. There are no major sell-offs happening in the market. If you look at the yesterday's action as well, even though it has traded near the previous day's low, but on the closing basis, Nifty managed to close above 18,700 level, and it managed to close in the green as well on the closing basis. Volume has also been above average in yesterday's trading session, again a positive sign. Previously, the volume has been staying below average, which was not a very good sign. When the Nifty scaling new highs, the volume has been below average, but couple of sessions we had seen good average, above average volumes. That is a positive sign for the market if you look at in the price volume action perspective. Coming to the O'Neill's market direction, we are continuing to be in a confirmed uptrend. Confirmed uptrend is a state where we'll be adding stocks to model portfolio, and our exposure towards the market will be very high. Our additions will be more aggressive in nature. Number of additions will also be in higher when you compare with other market stages, such as uptrend under pressure, rally attempt, or downtrend. From here, it's very important to track weakness in the market as well, because we never know when the market is going to top out. So it's very important to look for the signals which show that market is about to top out. One of the major signal is that tracking distribution days. That means Nifty falling significantly lower, that is 0.2% more, 0.2% or more on volume, also on the higher end, that is higher than the previous session. That indicates sell-off has started in the market. So any accumulation in the distribution days, that is distribution day count increasing to 3 or 4, definitely signifies that is a significant amount of weakness crept into the markets. So that is when our approach towards the market will turn cautious. So please be watchful for those weakness signals in the market. However, as long as the market trends higher, definitely model portfolio stocks and lots of stocks in the broader universe will also do well. Currently, if you look at Nifty mid cap and small cap, talking about broader cap indices, those indices are still not at all-time highs. Only Nifty is at all-time high. We want the participation from these small cap and mid cap indices as well, because lots of our additions will be more from these spaces rather than from the large cap index, that is Nifty 50. So whenever these indices also joins the rally, definitely we'll be able to outperform the market in general. Some other macroeconomic news or the stock specific news which have happened overnight and during the yesterday's session, and which will be impacting today's sessions, are India's November services PMI, that is Purchasers Managers Index, has come in at a 3-month high of 56.4. This is a very strong indicator on the services front. According to SBI research, on the Interest rates front, they are expecting RBI to increase another 35 BPS point in the coming RBI MPC meeting. The RBI is going to do such a move. Definitely, interest rates will increase, and banks will also pass on these higher interest rate to the consumers, such as retail and also to the private players. If that happens, definitely consumption will come down, and so loan growth will also come down. So capex plans will come down. So overall growth story will get hampered because of higher interest rates. We would want the inflation to come down lower. When the inflation comes down to 4 to 6%, which is the targeted range by the RBI committee, definitely RBI will also ease the interest rates. By then, interest rates will start falling. However, until then, interest rates will be staying higher. This is not particular to India. This is happening across the globe. US markets have also increased in interest rates. England, Europe, everywhere interest rates have been at 4 decade, 3 decade highs. So definitely, it is not a very good sign on the positive front, on the macroeconomic front. Sorry. Tata Motors is also planning to increase their rates for the coming from the next month. This is because of higher input costs, which all the other auto companies are also facing. Bajaj Consumer Care company is planning to do a share buyback in its meeting, which is held on December 9th, which will be held on December 9th. BCL Industries have received an order worth 285 crores from various oil marketing companies. This is to supply ethanol. Uh, in addition to this, its distillery unit has also bagged another project order from Reliance for a value of 107 crores. Again, this is to supply ethanol to these company. Uh, DTL tea company has signed a memorandum of understanding with another tea company, that is Apijay Tea. This is to in an understanding to acquire two tea estates of Apijay for a value of 110 crores. Kalpataru Power Transmission is also again, the board is meeting on December 8th to consider fundraising by issuing non-convertible debentures on private placement basis. So the outcome will be known by on the end of meeting, which will be held on December 8th. Coming to institutional activity yesterday, foreign institutions have again turned net sellers. They have sold more than 1,130 crores of equities in the Indian market, whereas the domestic institutional investors have given good support to the market. They have bought more than 2,600 crores of equities. Overnight, global markets, that is US market, closed significantly lower, that is 1.4% down. S&P and Nasdaq closing 1.8% and 1.9% lower. Asian markets are trading mixed. Shanghai and Nikkei are trading 0.3% higher. Kospi is trading 0.4% lower. This is the current trend the market is trading. Asian market, they are still in trading zone. SGX Nifty is also not indicating a major up move or down move. They are indicating a muted opening for the index. Yesterday, Nifty closed exactly at 80,701 level, so slightly above 700 level. So we are expecting another opening around a similar range. So there is no major hiccups happening on the opening end, but during the trading session, anything can happen. And also keep in mind, today is an weekly expiry of financial services, which was introduced recently. So the weekly expiry will definitely imply volatility to the market. So market might become intraday volatile during the trading session. For the chart of the day, we have picked RK Forgings. The chart is looking very good, and fundamentally also stock has a very good history track record of their strong consistent earnings. If you see here, sales and EPS have grown, especially if you look at EPS has grown in triple digit most of the times, and sales have also grown triple digits and higher double digits, around 50 to 40% growth rate. This is on consistent basis. The company has been reporting good set of numbers. That is reflected in its CPS of 76 as well. Price strength is slightly at 73. This is because when the market has made a new all-time high, this stock has moved nowhere. It has moved sideways with a few hiccups during trend. However, the RS line is improving slightly, and 73 is also not a bad technical indicator. ABD rating is at A, again a strong positive rating. This is because if you see most of the candles above average are blue candles. That is indicating a strong accumulation happening in the stock by institutional investors. So overall, both on fundamental and technical front, the stock is looking good. If it comes to its pivot another 4% from here, definitely we might consider for addition. Thanks for joining today's pre-bill. Have a good trading session.